One of the most successful technological business in the world, Microsoft, has produced more than 15,000 millionaires, which is a huge figure. The advent of the internet and globalization have resulted in an unprecedented number of billionaires, which is partly responsible for this phenomenon. Although gaining money and retaining it is difficult, since the world is changing so rapidly, if you are not astute as a result, you may lose all you have worked for in the blink of an eye. This is why the typical millionaire has a net worth of $2 million. When a man called Jeff Bezos submitted a patent for a system of purchasing products online that removed the need to first put your item to your shopping cart and then click purchase, it was hailed as revolutionary. Despite the fact that it seems to be so straightforward, no one should have been able to patent it. Amazon has gained billions of dollars over the previous 2 decades by licensing this package to firms such as Apple. This is why firms register for a large number of patents even if they do not need them, since they may be a source of infringing products in the future. Hey, let's talk multiple streams of income. Second, capital gains are earned when you purchase assets such as a stock or real estate at a lower price and then sell them at a higher price, resulting in a profit margin. For example, if you purchase 200 stocks at a cost of $300 each for a total of $60,000 and the stock price rises to $150 and you decide to cash out, your capital gain is $4,000. The tax rate on long-term investments is typically 15 to 20%, and the rate on short-term investments is 40%. If you pay attention, you'll notice that it's extremely popular among millionaires because the tax rate is only 20%. But if you're smart about it, you can literally pay no taxes. The first way is super simple. Just don't sell your investment and keep holding on to it. Even if you make billions of dollars, you won't have to pay a dime. So, what if you could utilize your tax payment to offset the losses you receive as a result of your financial decisions? In fact, the situation is much more convoluted than this. But this is the general idea. The money investors get from selling their poor investments is often reinvested into a comparable asset in order to realize losses, since it is more important to invest without experiencing some losses. Apart from capital gains, there are a variety of other methods to profit from stock markets, including dividends, which are distributed to stakeholders regardless of whether or not they control a significant portion of the firm. Although most firms earn tens of billions of dollars or more, most do not pay dividends, which is logical given that most corporations today are striving for trillion-dollar values. Dividend income is taxed at a rate of 15 to 20% for those in the 15 to 20% tax bracket. The solution for avoiding these taxes exists, but we'll reserve it for a future video. Wages, bonuses, and commissions are all examples of what is referred to be regular earnings. Whenever you trade your time for money, there are certain to be some disadvantages to be aware of. Individual income taxes make for more than half of the government's revenue, but corporate income taxes account for barely 70% of the government's revenue. indicating that people who earn this much money are responsible for the vast majority of the government's tax revenue. The government receives an additional 40% of its income through payroll taxes, which are meant to be split evenly between you and your employer. The most straightforward means of earning money, since it requires little thought or risk on your part, but it is also the most heavily taxed as a result of its simplicity. Due to the fact that, in the event that you were to lose your work, you would be left with no other source of income other than renting out your home. I explored the advantages and disadvantages of renting out your house to renters. Interest income is one of the most plain and uncomplicated means of earning money, but the rate of return is generally much lower than the rate of return on your other assets, since you are not actively engaging in the process of earning it. In a nutshell, it's when you lend money to the government, banks, and companies in the form of points in exchange for interest payments. The bank often takes your money and loans it to someone else at a higher interest rate, and it continues to collect payments from the borrower until it has fully repaid your half of the loan and pocketed the remainder. That is how financial institutions generate money. Finally, business income is exactly what it sounds like: money earned by the operation of a company, whether through the sale of a product or the provision of a service. For starters, you can expect 510 or even 25% of return on other forms of income, and the job is to minimize taxes, but that only works if you already have some wealth. However, with this form of income, you can expect 4,000% return on your investment, making it the most important type of income. It is a good idea to have many sources of income in case one of them fails. Yet, having multiple sources of income may be a major distraction. A full-time employment entails the management of a single source of revenue. If you have numerous part-time jobs, what are the possibilities of one of them becoming a full-time job? Instead of hopping from one source of income to another, focus all of your time and effort to becoming an expert in the one you now have under control. The time at which you can develop an additional source of revenue with minimum effort is when you should go on to the next step. This is the method via which individuals get wealthy in the first place. If you found this video useful, please give it a thumbs up, and if you're a new subscriber, please click on the bell next to it to confirm your subscription. Thank you for taking the time to watch, and please remember to subscribe the channel. Peace.